Pat from Trade with Pat calls this strategy boring.
And that's exactly why it's made me over $22,000 in the last few months with a 78% win rate. In this video, I'll show you.
We turned every rule we could document into an MT5 Expert Advisor, an EA, or trading robot. Then we let it choose trades automatically. Then one detail appeared in the final report. It changed what the headline really meant. This is not an audit of Pat's private account. It cannot judge every version shaped by human choices. The accounts were different, so comparing dollars would not be fair. We asked one simpler question. Can the rules we documented get close to the claimed win rate? At 9:30 Eastern, 3 5-minute candles form a 15-minute opening range, a box from the high to the low. Then a candle must close outside the box. Its direction sets the buy or sell bias. Next comes a supply or demand zone, where several strong candles suddenly drove price in one direction. The trader does not chase that move. Price must return to the zone before an entry is considered. The 200-period EMA shows the larger trend and blocks trades against it. The stop goes beyond the zone or opening range, often about 5 pips. The target is a recently reached price. It sounds precise until a machine must answer every small question on its own. How strong must the move be? How wide is huge? And when is a level from the 1-hour chart bad enough to avoid? Even entry varies. Enter on touch, react before the candle closes, or wait for a complete rejection candle. In one live example, Pat skips the opening range breakout and trades from 1-hour support instead. That judgment may help, but it leaves no single exact machine version of the strategy. Our EA is one documented automated interpretation. It is not an exact copy of Pat's trading. It accepts impulses lasting 2 to 10 candles. The zone must overlap the range, and rejection must happen there before the candle closes. The stop goes beyond the range. The target is 1.5 times the risk. At 1R, the stop moves to break even. The robot risks 1% per trade and takes at most 1 trade a day. Trailing and judgment-based filters stay off. The code then compiled cleanly, with 0 errors and 0 warnings. We tested USTEC on the 5-minute chart throughout 2025, using a $10,000 account and 1-to-100 leverage. MT5 processed more than 79 million ticks, using every tick modeling and a 100 millisecond delay. History quality showed 100%. We checked every saved setting against the final report. All 71 inputs matched. There was no forward test, a check on unseen data, or maximum spread filter. No separate commission was recorded, while swaps cost $55.16. Across 2025, the robot opened 86 trades. The balance climbed and fell instead of rising smoothly. May delivered 5 wins in a row, adding $778.53. From November into December, 6 straight losses removed $309.89. Some trades hit the target. Others first gained 1R, then closed at break-even, the starting price, with no gain or loss. But those 2 streaks could not explain the whole year. The rest of the curve would decide what the result really meant. The $10,000 account finished at $10,922.17. That is a $922 profit, or 9.22% for the year, positive but modest. Profit factor was 1.25. So for every dollar lost, gross profit was about $1.25. Maximum equity drawdown was 5.08%, the biggest peak-to-trough fall in account equity, including open trades. The drop was limited, but so was the return.
Account, and in my backtest, it's at 78% over 110 trades using recent data. Now, this is not a guarantee of future.
MT5 labels, 34 of 86 as profit trades, 39.53%. But 4 of those 34 ended at exactly break even. No profit and no loss. That leaves 30 trades that actually made money. The strict win rate is 34.88%. So our trading robot did not match the claimed rate. That still does not judge every human version. The yearly total hides another clue. 6 months were positive and 6 were negative. May alone produced $827.32 of the full $922.17 yearly profit. Without May, the other 11 months made only $94.85 combined. One trade opened at 65.7 lots. Why? The 1% risk rule met a very tight stop. That does not make the backtest useless. But it raises a serious question. Could trades that large be filled the same way in a live market? Under this test, the robot made a small profit, but it did not reproduce the claimed 78% win rate. Pat's judgment-based version could differ. We lack the choices, market conditions, and settings needed for an exact copy. Here is what we found. This robot, using the documented rules on USTE-CM5 in 2025, did not match the claim. Before we trust this profit, we need unseen data, more years, and realistic trading costs. Want another strategy investigated? Leave its name or link in the comments, and tell us which claim to test. If you want more trading claims checked against real data, subscribe and like the video. Backtests cannot guarantee future performance. This video is educational, not financial advice.